It's neck and neck, a dead heat, and that is official. Polling day is underway in the US, with the first votes cast shortly after midnight in the New Hampshire hamlet of Dixville Notch. The result? 5 votes each for Obama and Romney. In less than 24 hours, we should know the national result, and it may be every bit as close. Today's other top stories. G20 countries are giving themselves more leeway to tackle the budget deficits. Finance ministers gathered in Mexico say previous plans to cut deficits in half by the end of next year now look too dangerous for the world economy. The summit communiqué says deficits will now be tackled at an appropriate pace. Greece braces for a 2-day strike this morning. The stoppage comes a day before a critical vote on austerity measures by Greek MPs. The government expected to secure a narrow victory on a package of spending cuts and labour reforms. Out now to Christian Schultz, senior economist at Berenberg Bank. Christian, let's start with the US. What would be the best or the least bad outcome as far as tackling the fiscal cliff is concerned?
Well, I think that if Romney wins and has a clear majority in Parliament, in US Congress, that would make it easiest to get around the fiscal cliff. However, that's not the most likely outcome of the election. Most likely outcome seems to be that Obama gets re-elected as president and Congress remains split, and that indeed might be the worst outcome in terms of the fiscal cliff.
But if that's the worst outcome, as you seem to suggest, that's what markets are expecting, so they're essentially priced in for that kind of outcome, no?
Well, it's certainly the most likely outcome, and so it should be priced in. But as always with these things, there's always optimists who think that there will be a different result. And when then the actual result comes in, they are forced to act. So there might be a negative market reaction if this most likely outcome is indeed the outcome tomorrow morning. OK, Greece, as I said there, another crunch week. I mean, we've had several of them before. Yet every time Greece seems to pull through. Why should this week be any different? Indeed. Why should it not pull through? Well, it's very close. We have attrition in the government. The government is continuously losing parliamentary votes. There is members of the 3 different parties resigning or saying that they will vote against these packages. So it will be a very close vote. But as you say, we've had these very close votes before. It's still more likely than not that they will pass the reforms tomorrow and the budget on Sunday. But it will be nail-bitingly close.
And finally, on Spain, tomorrow the European Commission gives its official growth forecast. Today, though, in Spain, the El País newspaper has reported that the EC will say next year Spain will contract by 1.5%, and that, of course, that's against a rather optimistic government forecast of minus 0.5%. What's your reaction to that?
Well, our own forecast for Spain is not as bad as the minus 1.5, but it's also worse than the government forecast of minus 0.5 is. What is clear is that Spain, with all the austerity that's still going to hit the economy next year, is going to find it very difficult to get out of the recession in a very short time. They have to rely on exports, and they have to eventually rely on investment returning, which is very similar to all really of these crisis countries. But in Spain, the austerity is just the harshest probably next year. So we don't see the minus 0.5, but minus 1.5 might be a bit too harsh, given that the world economy is likely to grow a little faster next year than this year. OK, Christian, thank you very much. In today's European earnings, Marks & Spencer says first-half profits were down for the 2nd straight year, though it still beat forecasts. Food is a bright spot for the British retail bellwether, but general merchandise sales continue to slide. BMW also beating expectations. The world's largest premium car maker seeing earnings jump by nearly 14% thanks to robust demand in China. Even so, the company says tough trading conditions are now starting to squeeze margins. Nissan earnings also just out in Asia. Reuters' Tara Joseph is in Hong Kong. Tara, yesterday it was bullish numbers from Toyota. Today, is Nissan as rosy?
Nope, not as rosy as all, Jamie. Basically, Toyota yesterday had strong earnings based around the U.S. being very good for them, China not mattering very much. Nissan, it's the opposite story. China is the company's biggest volume market. It's suffering there due to the China-Japan tension. As a result, Nissan has cut its full-year forecast by a fifth. Second quarter profit was up 7.7%. And as I mentioned, Nissan is also facing huge competition in the U.S. market, where Toyota is doing very well. So unless car sales in China of Japanese automakers start to rev up again, Nissan's going to struggle. We saw that as well in the share prices today, by the way. Toyota up, Nissan down.
OK, that tells its own story. On now to the RBA in Australia. The Reserve Bank kept interest rates on hold. That was something of a surprise.
That was a bit of a surprise, catching a lot of people on the back foot. And one of the few places in Asia today where we're seeing a lot of sort of action ahead of the U.S. elections. And basically the Australian dollar jumping to 5-week highs. People had expected that the RBA would cut rates, but they decided to wait a while, leaving the door open for a rate cut in the future. Rates standing at 3.25%, but the RBA worried that higher inflation and also an improving backdrop may need to keep them on hold for a bit. So we'll keep watching that. Australia rates compared to other industrialized nations are actually still quite high, but they are suffering on the back of China's slowdown. So an interesting picture there.
OK, Tara, as always, thank you very much.
Thanks,
well, that's
Jamie.
all for now. I'm Jamie McGeever. This is Reuters.